Do you want to learn Elliott wave theory? Well, if so, consider joining the Green Star Trading Patreon for Tier 2 at £10 a month or Tier 3 at £15 a month, and you'll get access to this Introduction to Elliott wave theory series, which is an 11-part video series you can access, which basically will teach you Elliott wave theory from scratch as an easy to follow format. You'll also get access to series like the My Chart series, which shows you how I use all the indicators and tools I use on TradingView and how to set them up the same way. There's also a playlist for trading using what I call the standard trade setup. There's lots of other educational material as well. Plus, what I think are the main benefits of joining the Green Star Trading Patreon. If you join at Tier 2 for £10 a month, you get everything I just mentioned. You also get access to the public Discord where there are hundreds of members discussing ideas daily. You also get access to the weekly live streams where I can often waffle on for the best part of 5 hours. And in those things, you're free to ask me anything you want in the live chat, within reason, of course. Free to make requests for me to cover certain assets. And even if you want me to look at your own Elliott wave work and submit it via the Discord, I'll happily go through it in a live stream as part of a learning experience. You get all of those benefits, plus weekly exclusive videos and all the prior educational content I produce. But if you want even more, and for just another £5 a month for £15 a month, you also unlock the monthly dividend calendar and the stock rating system I put out at the start of every month as well. And if neither of those things appeal to you and you just want to support the channel on YouTube, then £5 a month would be very welcome. And you still bag yourself an exclusive video each week. Essentially, what I think you're getting here is exceptional value. If you want to learn Elliott wave and you want access to a trading community and all this educational material, give it a try for just £10 a month. And if you don't like it, you know, cancel your subscription before the following month. Anyway guys, let's get back to the video now. Cheers. Hello everybody and welcome to Green Star Trading with me, Tom. All views, opinions and ideas expressed in this video are my own and do not constitute financial or trading advice in any way. Right then, carrying on our theme for the week, we're looking at a bunch of altcoins this week. We looked at Solana yesterday, we're going to be looking at XRP today. The oil video will be out, already out, and I'll have gold and silver out later in the week, and also the stock markets and also Bitcoin plus a couple of other altcoins. So just generally a busy week overall. Now, we had a series of counts available for XRP and they've all been narrowed down to this one over time. So what I'm just going to do is give you a quick reminder. Now this one here, the expanding leading diagonal, we first discussed this many months ago. You can find this on the YouTube channel. We've discussed it on occasion on the public Discord as well for our Patreon members, and it's been brought up in live streams and yada yada yada. Essentially, the element we're going to be discussing today is the corrective element and the options we have to explain it. Okay, so we're going to look at those later. But first, let's just talk about the ideas that I've deleted. And I'm going to give you a very rough idea of what they were, so I don't want to spend too much time. They were all focused on the idea that we had bottomed here in the March 2020 low. The first one was the idea that we had done a primary one and a 2 here, an intermediate one and a 2 here, a minor one and a 2 here, and then this was going to be a 1. And guess what? Well, that broke down. And it was pretty much a long shot to begin with because each successive subwave became longer in time, although less severe in price. This is a little unusual. There is some precedent for that kind of behaviour, but it is pretty rare, and it got invalidated anyway. And another idea we were looking at for a little while was the idea of a larger combination. So this move down here was actually a W. This move freeway here was an X, and that this was going to be a triangular Y. Okay, basically a zigzag connected to a triangle, a combination, and we were going to come out of here. Well, that got invalidated when these lows got taken out. So both of those counts have been deleted, and that's left us with one of our older counts, which is the idea of an expanding leading diagonal. But it is currently, as a bullish count, the only valid one I have left. Now, I have pointed out on occasion that people have said, well, this 4 almost comes back beyond the 2. It doesn't come back beyond the 2. It may almost come back beyond the 2, but it doesn't actually do it. It does come deeply into the wave 1 territory, there's no doubt about that. But 3 subdivides as a zigzag, which is longer than 1, which subdivides as a zigzag, which is both shorter than both 3 and 5, which also subdivides as a zigzag. So 5 longer than 3, 3 longer than 1, 4 longer than 2. an expanding leading diagonal. Perfectly happy with that. Now if we go into line for a moment, just so we can get an appreciation for the fact that the 4 is still deeper than the 2. Now we see without the volatility of that wick, we get an interesting rising lower trend line here, which also accommodates for the expanding diagonal idea, right? But it doesn't look anywhere near as ugly in terms of such a deep retracement for the wave 4. So I have been going back and forth in the crypto space a bit more between the line and the candle chart lately, because there are such volatile moves sometimes that I'm not sure I trust the wicks of these candles more than I trust the overall structure of the Elliott wave, you know, itself. And I'm still mentally in a personal debate with that one with myself. So either way, looking at both can't be harmful, can it, if it gives us different ideas. So from there we come up into a wave 1, and now we get this complicated bit that we've got to deal with. Now this has been a bit of a pig. At first the triangle looked like it might be viable. Okay, we had a relatively nice downward trend line, and we had a pretty okay upward trend line, and it kind of looked like a triangle. It wasn't a bullish triangle in the end. So let's discuss the first idea. Now I'm not giving these primary or alternate. I haven't decided which one I prefer. So let's move this up a notch. We've got zigzag here. Now what I've done here is I've included a triangle, and I've said that we've got 5 waves down here into an A B wave triangle, and 5 waves to unfold in a C. And this whole thing is just a zigzag, but it doesn't look like one. Okay. Now we've got 1, 2, 3, 4, 5 waves down in a slight truncation in terms of, once again, if we look at it in line chart, it's not a truncation. 3, 4, 5 into an A. We can see here that the 1 and the 2 and the 3 and the 4 and the 5 subdivide within the subwave of the 3, and the 1 and the 2 and the 3 and the 4 at minute degree we don't get an overlap. It only looks a little messy with the candlestick chart, but even then it's still legal. There's no overlap with the 4 at minuet degree, and there's no overlap with the 4 at minute degree. We just get this slightly truncated low for an A. We then get a 5 wave move up into a rather extreme extended A. Okay. I can't really subdivide this any other way and make it make sense. Alright, so we get subdivision in the A, B, and 5 waves here. 1, 2, 3, 4, 5. You can see it. It is definitely there. And we get 5 waves up in the C like so. And this gives us the first A wave of our triangle for a zigzag. In the B wave we get a combination. Okay, complex. Now we're only allowed 1 in the triangle, but we get this to work quite smoothly. If I just walk you through it, we go A, B, C to here. This will be sub-minuet degree. And then we get A, B, C to here for our X wave. And then we get a final A, B, and C to here for our Y wave, to complete our B for the triangle. Now the next bit is a little bit shitty looking, to be absolutely honest with you. We have to have a extended C, so we go A, B, very extended C to get the C, but that's the only way I can get it to subdivide as 3. Now it's not completing as a flat in here, as 5 waves, and it's not part of an impulse as we went lower, so it has to be 3 if it's anything. Alright, it's just ugly. We then get an ABC again, a B, I think that might be a triangular B, down into a C to get our D, and then this somehow has to subdivide as an ABC again, and I think I would probably look for the C to be a diagonal. Here would probably be my best bet, with a slight overthrow in the 5th there, something like that, and we would say A to here, B to here, then 1, 2, 3, 4, 5 to get the C of the E of our larger B. So we've had our 5 down in an A and minor degree, our very convoluted B wave triangle to get our minor B, and then we began 5 waves down in a C wave to complete our zigzag, and I think there's a 5th wave to come. Now you can squeeze all this back a notch, so you can go 3 into 4 into here, into 5, and have a 3 here and a 4 and then a 5 down to here to complete and say we're done. Right, but it looks a little stretched. Plus, this does not look particularly impulsive to me at the moment, so I think here in XRP there's room to go lower, and this might well be a triangle that's forming currently. Okay, for our wave B. Sorry, for our wave 4. Excuse me if I've been saying wave B. I did not get enough sleep last night. Either way, I think we have to probably extend it to here at least. 1, 2, 3, 4, nice extended 5th here in the 3rd. Into a triangle, looking for a 5th down in the C to complete the 2. And that's our first idea. So let's add in all this extra bits and bobs, and we'll put them into the zigzag count. Right, now I will be the first to admit it's a mess in places, and it doesn't count cleanly in places. That's true as well, but I've been having that problem in a lot of altcoins, where it's just difficult to get clear Elliott wave counts. So I am, on occasion, happy to refer back to the line chart just to see if I can get better subdivision without all of the interference from the wicks of these candles. But there is no overlapping here, so that's fine, we can live with that. The complexness of the triangle, the A to C trend line is not respected at all. It goes to here, and we jump over it in the E, and we jump over it as part of the B. That is not a pretty sight. To be honest, it's just not a pretty sight. I don't like it, but what can you do about it? It's just the way it is. I have trouble explaining this otherwise. So let's talk about the alternative explanation. We either use a triangle for a B wave, or we do what I've labelled the zigzag party, because this is literally just zigzags for days. Okay, so we had zigzags on the way up to begin with, because we're dealing with an expanding diagonal. Now the way I've subdivided this is 5, 3, 5 into a W. A, B, 5 in a C for a flat to get the X. These are the minor wave degrees. Minor W, minor X. All of this is minor Y, and it subdivides as W, X and Y. Again, another double zigzag. And we have a running triangle for the X wave here. Now the AC trend line is more respected here. The E does poke its nose over it, but it's only wick that's poking over here. However, inside of the W, we have another W, X and Y. It's another double zigzag. This is a minuet degree within minute degree within minor degree, double zigzag within double zigzag within double zigzag. Hence, zigzag party is what I'm calling this count. Now from here we get a running triangle, 3 into an A, excuse me, 3 into a B, that dodgy 3 into a C, 3 into a D, and then 3 with that diagonal probably into the E, and that's probably the best I'm going to get. That gives us our X wave, and then I'm undecided here whether we've got a short A, B and an extended C, or whether we've got an extended A, 1, 2, 3, 4, 5, A, B, and this will be the C. Okay, either way, another move down in both cases is expected. But as I said in my Solana video yesterday, I feel we're getting very close to the lows. I believe the lows are imminently arriving, so within weeks. We're getting to that point now where more, I mean, we've been correcting. We haven't had another high since 2018. January 2018. So when I say we are closing in on the lows very soon, I mean it's a matter of weeks until we get there, I think. That's the bullish count I've got. An expanding leading diagonal into a 1. And we can either say W, X, Y, our zigzag party count here, or we can just say A, B, C, triangle. They both have problems. I'm not particularly bowled over by either of them. It's just a bit of a mess. Best of luck, you know, with your own endeavours if you're in trading XRP. But I honestly don't have a preference at the moment. I need to see a little bit more price action. I feel like we want to break down here though. I feel like we want to have one more flush out. So we discussed our bullish ideas. So before we look at some basic classical technical analysis, or what I often call basic technical analysis, let's just look at the bearish idea, because we don't even need to go into any detail here. Whatever we're dealing with here, whether it's multiple zigzags, I have seen people say W, X, Y, X, Z. Not a fan, as Y should still go deeper than this initial W, and it hasn't. But honestly, I think we'd probably be in for thinking about something like that if we were to have the bearish count here, because this does not divide nicely as an impulse. You can't have that triangle idea for a 1 into a 2, because it's not allowed in a 2, it can only be allowed in a B wave, X wave, or a wave 4 of an impulse, or as part of a triangle as well. Either way, getting down here is problematic structurally. I have a hard time figuring out how we would actually do it, since we don't have an impulsive move off of this high. We never got 5, we got 3. I've pointed that out multiple times before, so I don't think this bearish case is very likely at all, but that's basically the best I could do with it. This is some kind of free wave structure. This is definitely some kind of free wave structure if we're going to count this as an X rather than an expanding diag, because it can't be a motive wave if we're going to make a new low. It would have to be free, you see. We don't come to 90% retrace, so this can't be 5 for a flat. So this also would be some kind of free wave move, but I don't think that's very likely. So now that we've done that, let's sum up the video now. I just want to share an idea I had, and rather than place a parallel channel across these highs and across these lows, what I noticed, I built my own little rough channel, and all I've done here is, rather than using the parallel tool, I've drawn a line for my median line, and what I've taken, I've gone back and forth and fiddled with this quite a lot. Interaction here with this median line, a whole series of lows bumping into it, a break back and a test of it, and a test of it again in this section here. Highs being tested here, and resistance, okay, resistance here and support here. I've noticed this has interacted multiple times, so I thought to myself, well, what if I base a pitchfork off of this? And this is what I got. Okay, so using the same median line position, I've set up a pitchfork, and what I found very interesting is it plays extremely strongly with the price action here. So the median line is in the same position, so it gets all of that previous reaction. But look at this rising 23.6, the red dotted line there. Right. Observe how that was constant support. Observe the test of the 61.8, test of the 50, back test of the 50, test of that median line. 23.6, 38.2, 23.6, 61.8, 61.8, 61.8, 61.8, breaks 89%. Okay, out on the 89, 23.6, 23.6, 23.6, 23.6, median line. This pitchfork is interacting incredibly strongly with this. Now, once again, pitchforks don't have to hold. They're simply providing support and resistance while price action is inside of it. Price action transitions into some other form of supported geometry, that will probably take precedence over a broken pitchfork. It's all about the algos basically figuring things out over time. Now, what I also find interesting is if we turn off this pitchfork for a minute and we bring in our group 1 count for a moment, I've got an 89% retrace listed here. Now, if I go into linear scale and I use this fib, we can see that just like Solana, we're sat just above the 89. With a push down to get us to the 89 or 90% retrace, giving up 90% of this prime move is a very deep 2. Very, very deep 2. There's a lot of altcoins in this exact position at the minute, hence why I'm feeling that we're getting very close to the lows. So that's it really for XRP at the moment. Now, before we go, we'll just have a quick look at our indicators here. So RSI is quite interesting at the moment. There's no obvious bullish divergence as we haven't set another low, but we've had this trending rise of higher lows back into neutral territory in the RSI. Price action has been considerably sideways at the moment, so we can't call this true bullish divergence as we don't have the lower low to go with the higher highs, but we've been going lower highs, right, in the RSI, and we've had the higher lows in the RSI, higher lows here in the RSI, so this very much feels like a triangle at the moment. However, we don't have the higher peak here in the RSI to support the idea of a triangle. So there's a little bit of hidden bullish divergence here at the moment. Now I don't think it will necessarily amount to anything, but we should pay some notice that the volume has increased slightly in this area. We had this spike around the lows. I mean, the only way you could really interpret this bullishly would be if this was a 1-2 and a 1-2, and we're about to do something like that. It really doesn't count like that off of the lows, though, to be honest. So, just a curiosity, perhaps, before having another test. Maybe momentum's building up underneath in order to set a higher low in the RSI. So maybe we have a breakdown 1, 2, 3, 4, 5 to a lower low, but we get a higher low in the RSI. That would be stronger bullish divergence at that point. The on-balance volume is just supporting the sell-off, giving us lower lows over time and lower highs. We are a long way back from the lows around December 20. However, any time we put in a low here, we are going to have very long-term divergence there. But as this is a cumulative indicator, I don't think we can really read into that. MACD still below the zero bound. Some positive momentum here. Probably once again a little bit more positive momentum than is warranted for such a sideways pattern. But we'll see. Like I said, it's either a triangle or it's 1-2, 1-2. My bet would probably be that it's a triangle, and we're setting up for higher lows in the MACD and higher lows in the RSI with one final breakdown. Okay. Depends how violently it breaks down. Now, from a moving average point of view, you can see on the daily time frame we are well below the 10, we're below the 10, below the 20, having back tested it recently, well below the 60, well below the 250. Come on to the weekly time frame for a minute. We are now below the 250 weekly exponential moving average. We've got the 10 coming down on top of the 250, and we've had the 20 cross the 60. This gave us this low here with the long wick, but nothing has translated yet into bullish momentum. So for the meantime, looks like we've got lower to go. Looks like we're having a very deep correction, which is perfectly normal off of a leading diagonal. Wave 2s in the crypto market can be very deep at the beginning of large bull runs, large cycle wave 3s, intermediate wave 3s, primary wave 3s. You get the picture. So I think really we've got a little lower to go, but that's the best I can make it of it at the moment. It's not perfect by any means. Right then, so there you go. So thank you very much for joining me on this technical analysis of XRP. If you're new to the channel, if you like what you're seeing, please subscribe, smash the like, hit the little bell notification icon to remain informed of future video releases. Feel free to leave us a comment in the comment section below, and as always, a huge thank you to my Patreon subscribers. Your support is massively appreciated. If you do want to join the Patreon, there's a link in the description box below. Follow it over, have a read of the tiers, see if there's anything you like, and feel free to sign up. It's still the start of the month, so it's a good time to do it. And if you're not following me on Twitter yet, please do so, as I always announce my video releases on YouTube, on Twitter. Alright guys, take care of yourselves, and I'll be back with you again tomorrow with another crypto and another traditional asset to look at. Take care of yourselves. Bye bye.